Hello, today is June 23rd, 2024. Just wanted to make another quick video about 8 stocks to have in your portfolio the second half of the year. So far, this has been a great year for stocks, no matter what you owned, especially if you're in the growth stocks. I just bought over 3,000 shares of NVIDIA. I mean, there's a nice pullback on Friday. Excellent time to buy the dip. You can follow the Webull Challenge for more. I'm on YouTube, Instagram, Twitter, and TikTok. Let's see. First stock I want to talk about today is NVIDIA. They're down 3% on Friday. It's currently trading at $126.99. Excellent place to buy in, with everyone waiting on the new inflation reports and basically the consumer price index. Friday there should be more information out. It should help the price go back up to around 135 or 140. But every time there's one of these big reports from the government comes out, stock prices usually fall a few days before and then go right back up as soon as they release the data. Second one is Eli Lilly, which is the second best stock I've owned. It was up it's up 12% in the past month. I made over 140% return on my investment last year, and stand to do a lot better this year. Eli Lilly's up it's up 97% in the past year and just continues to climb. It's probably one of the easiest stocks to trade if you're a beginner. I would highly recommend it because 80% of the company is owned by institutions, and it's a very easy company to predict. If the stock market's going up, Eli Lilly's going to go up. If the stock market as a whole is going down, it's going down. And there's not as much volatility as you would see with NVIDIA or another large growth company, because when the institutions own it, they're going to protect the stock price. Something really major has to happen for Eli Lilly to dip in price. The next stock I want to talk about is Costco, which is similar to Eli Lilly. Another great stock to own in your portfolio long term. It's probably one of my favorite stocks. It's up 68% so far in the past year, and it just steadily climbs higher every single month. If you look at its chart, it's green all the way through, which is what you're wanting to see if you're either an investor in the company, or if you're even if you just day trade. I mean, starting out, this would be another perfect stock to own. Its range was 847 was the low and 866 was the high. The next stock, Carvana. It's up 380% in the past year and just continues to climb higher. When earnings came out last time, the stock just soared around 25% higher. Excellent company to own right now in this bull market. The next 6 months are looking very green and very profitable if you own any of these stocks on this list. Then we have Amazon, which is up 50% in the past year and is steadily climbing higher. Personally, out of all the stocks on this list, it's probably the number 8 stock. Not my personal favorite, but it's an excellent stock to own long term. It was trading between 185 and 189 on Friday, so another easy stock to trade. Mainly if you day trade, I always teach that you should buy stocks that you can own for life, so that way you don't really get hurt if the stock happens to fall in price. Eventually you'll regain any losses you have over time. Then we have e.l.f. Beauty, which had some good news earlier this past week, and it went up over 10%, I believe, on Wednesday. e.l.f. Beauty's up 92% in the past year, and it has plenty of range between 203 and 209 a share. There's not a whole lot of volatility with e.l.f. There's only 1.32 million shares traded, but another easy money maker if you want to trade stocks. Then there's Williams Sonoma, ticker symbol WSM. It's up 154% year to date. It was trading between 295 and 305 on Friday. It's one of the few stocks, when I look at its forward PE, that it's backwards. Its current PE is 1862 with a forward PE of 1993. So basically, it's the one company that I have on my watch list, but it's generally a rule for me that your forward PE's got to be lower than your current PE, because you want your company to always be growing. That's a pretty bad sign if their financials are messed up. And that's the first thing I check when I'm evaluating if I want to put a stock on my watch list. We got Dell Computer, which is up 200% in the past year. Another great company to own. It traded between 140 and 147 on Friday, with 16 million shares traded. Another great investment long term, and it still has plenty of room to continue to climb higher. Then my bonus stock is Blackstone, ticker symbol BX. It's only up 40% this past year. I expected it to do a lot better. The analyst's been kind of tough on it. Its last price target was 125, so it's right there at it. You generally, when you have a growth company, you expect that a lot of the financial analysts will set the price target, $5 or $10 higher or more, depending on what's going on with the company. But with Blackstone, they pretty much shorted Blackstone a little bit, if you ask me, and put it at 125, which I think, with looking at its PE at 43.77 with a forward PE 25, this company's price target should have been 150 a share. So they kind of got that one wrong. It really doesn't matter which of these companies you own. They're all excellent long-term investments, and this is my picks for the next 6 months. So I would say hold these until the Christmas rally and then sell, take profits just in time for taxes. You should see some excellent gains and should be pretty satisfied with the outcome. I appreciate everyone liking the video this week. Please hit the like and follow button. you want a free stock from Webull, please click on the referral link in the comments below. I'll make another video next week. Message me if you have any certain stocks you'd like me to talk about. I'd be more than happy to analyze them and make a YouTube video about them. I hope everyone has a very profitable week.